Hello traders, today is February 22nd, Wednesday. I have here the Emini S&P on a 1-minute chart, and I'm going to add a software that we have at DayTradeToWin. It's proprietary software that tells us exactly what the market is doing. It's called the roadmap, the DayTradeToWin Roadmap. Now, there is nothing we have to do. It provides everything that we need. There's no optimization. You can increase the text size and change some colors, but there's really nothing more you need to do. So if we click OK, what you're going to see is the shaded areas on the chart that tell us exactly where the market is going to land and reverse. Now this is great for filtering. This is great for an opportunity to counter trend trade. So what you're seeing here are a few of the zones indicating to buy or to sell. Now, I'm going to explain to you exactly how this works. Remember that trading is risky. Please don't trade with funds you cannot afford to lose or are risks involved with trading. Let me expand here the chart and show you a little bit on what you're seeing. So today, the market is going up and up and up and up and up. And once it lands in the first zone here, says zone A up, typically what happens is the market pauses, maybe reverses, and you can see that it got stuck here for a little bit. And the one thing you're going to notice is that it went through it. So once the market and the candles go through the zone, the likelihood of it going higher actually is a possibility because the zones are there to enforce a profit taking. So once this happens, the market went sideways and then went higher. So once it broke here above the zone, this is telling me that we're going to go higher, and eventually it did. So again, it went to the next zone. This is called zone B up, and you can see that it never went through the zone. Instead, it got stuck by a couple of bars and then gave us a signal to go short. So this is a good thing because this is counter trend trading. This is telling you not to go long. Unlike this one, when it went through the zone, it said, okay, you can go long at this point or go long because this zone is not holding. And so it went a little bit higher. And now it says to go short. After it went short, it went sideways here and then came all the way down. And you can see what happened. Once it hit this next zone, not only that, it bounced off of it twice, 3 times, but again, never went through the zone. So the idea is once it lands in the zone, the likelihood of it going through it is an opportunity as a continuation or a reversal if it bounces off of it. Now we're here at this point and the market got stuck here and actually gave us a signal. So this is generating a signal to go short. There's a signal to go short, and where you want to put your stop is right above the zone, or even what I consider a pivotal stop, which is a couple of ticks above the highest high. So as soon as this produced a signal, which was at the close of this candle, 50.81 quarter, right? So if I put this here, this is 50.81 quarter. What happens here, I'll just do that, 50.81 quarter, like that. So what happens is it gave a signal to go short and we have a stop. So this is a very tight stop. 3 ticks, I would, venture to say a point or a point and a quarter would be a good stop. But this is a very tight stop, which is either above the zone or pivotal stop. And as soon as you went short, the market failed and went higher. And that's okay. We're looking now at the next trade. A small stops is what we want. It went higher once it broke through, never hit the next zone, and now it's reversing. So what you're seeing at this point, it's about 12:45, 12:50 on a Wednesday, February 22nd. What you're seeing here now is a new opportunity. Either the market is going to go up, get stuck, and reverse at this zone, or if it continues lower, a new zone is produced, which is telling us to avoid going short and seeing if it bounces off of it. So how I like to use the roadmap is typically on days that we have the market doing this, right? So these are most days. We have a roadmap zone, it reverses to another roadmap zone, reverses another roadmap zone. So when the market's chopping or flip-flopping, this is essential to use because traders know that the market is chopping around and these zones help you stay out of trouble. Now, if we have a day that is a strong trending day, so let's say that we have a day that is very strong to the upside or downside, where it just keeps on going and going and going, and you have these zones, let's say that it's here, and it broke the zone, and then here's another zone, let's say here, and it broke that zone, and here's another zone here, and it broke that zone. As soon as we realize that the market is not chopping or flip-flopping or range bound, instead it's breaking the zone going higher, that's telling me that we're in a trending day. Every time it breaks the next zone, I can go long as it reaches the next zone until it reaches the next zone, and the same thing on the way down. If it goes down, breaks the zone, I go short, breaks the next zone, go short, break. So on trending days, this is great because it tells me that the zones are not being held and we have a strong trend. Or on most of the days, though, we have the market chopping around and flip-flopping and going from zone to zone. So this is this morning. Let me just go back to yesterday here. So this is today, this is this morning. Here's a first trade here of the day was a long, hits the first zone, and here's an example of right after the market opened, it went through to the next zone, stopped, and then reversed. So this was this morning. If we go back to yesterday, all right, so this is yesterday, February 21st, pre-market, it went right down to the zone, bounced off of it, got stuck a second time, remember, never went through it, got stuck, and then reversed. Came up to this zone here, went right up to the edge, and then reversed. Went to the next zone down, and reversed. Here it went through it, almost made it to the next zone, and then reversed. Went through it, stopped, reversed. So you can see just within the first 2 hours how vital it is to understand what the roadmap is telling us. So roadmap for traders, either it's going to stop or go through it. Went through it, I can go short. It stopped, didn't go through it, produced a signal, I can go long. Now, if you want more information on the roadmap, visit DayTradeToWin.com. You can also get a free member account to get you started understanding a little bit more on how we trade price action. And we also have a live trading room every day that members can join. Visit DayTradeToWin.com, and I'll see everyone at the next video.